List a house, host a weekend open house, and sign the closing papers by Monday. That was the standard rhythm of the American housing market. But data from February reveals a sudden, massive freeze. This breaks down U.S. home listings. Exactly half of these units have sat on the market for 60 days without a buyer signing a contract. Historically, that 52.2. They deliberately list their home above its actual market value, operating on the assumption that interested buyers will simply try to negotiate the number down. A recent survey highlights the sheer scale of this confidence. 81% of potential sellers believe they will easily secure their asking price, or even more. This graph illustrates price anchoring. Sellers fixate on an artificially high number, dropping an anchor that prevents adjusting expectations downward. Their minds remain anchored to pandemic bidding wars, blinding them as actual buyer demand drops independently of their asking price. Economists like Realtor.com's Danielle Hale warn that these specific psychological anchors are entirely divorced from the reality of today's housing market. Sellers are attempting to negotiate through an outdated lens, even as the underlying market conditions shift beneath them. This psychological friction does not happen everywhere at once. Tracking the data regionally reveals exactly where sellers are most disconnected from buyers. The South is the epicenter of stale listings. In Miami, 62.6% of home listings sit stagnant. The trend extends to San Antonio, hitting 58.3%. But sweeping to the West Coast reveals a more fluid market. San Francisco's stale rate is just 24%. The mechanics of the price-high strategy fail in weaker markets. Buyers are stretched thin by high interest rates. Encountering unrealistic price tags, they don't bother negotiating. They simply walk away. This grid tracks the statistical reality of the seller's strategy. Despite aiming high, 9 out of 10 homes on the market right now are selling for under their initial asking price. By intentionally overpricing a home to protect their profits, a seller practically guarantees they will walk away with less money than they originally asked for. Consider the perspective of a buyer when they scroll past a property that has sat unsold for over 60 days. The days on market counter acts as a stigma. Buyers instantly assume the property has a hidden physical flaw or a lingering legal defect that scared everyone else away. Once that psychological red flag is raised, sellers are often forced into the difficult position of pulling their home off the market completely. They have to execute a tactical retreat, keeping the house unlisted for months in a desperate attempt to scrub its digital history before trying to sell it again. The bygone era of the effortless, high-yield home sale has officially hit its most significant roadblock in 5 years. To successfully sell a house in this environment, owners have to abandon their psychological price anchors and immediately respond to the feedback they are getting from active buyers. Until that behavioral correction happens, sellers are essentially paralyzing themselves, adding their own homes to a $347 billion mountain of real estate that nobody is willing to buy.